Hello and welcome to the next of our full course lectures. This lecture is on the Audit Committee and internal audit. So we're going to look at the Audit Committee, we're going to see who makes it up, what the objectives of the Audit Committee are, and what its relationship is to internal audit. We'll then think about internal audit and who will be within that function in the business. Do realise that the internal audit function is not the same as external audit. Internal audit is a department of the business. Their salaries are paid by the business and they work for the business. So we'll talk in more detail about what makes up that internal audit function in the next lecture. So let's look at the Audit Committee first of all. So first things first, we need to think about who makes up the Audit Committee within an organisation. So the members of an Audit Committee will be at least 3 non-executives. So we want the Audit Committee primarily to be non-executives, in fact to be fully made up of non-executives. In a small company we could have 2 non-executives. But in a larger company, we need it to be made up of all non-executives, at least 3 of them, and also one of those must have recent, relevant financial experience. So we're thinking here that we want our audit committee to provide some value to the business. And we're thinking that we want them to provide value particularly in the area of the financial statements and financial controls. So we require therefore for one of those members to have that recent relevant financial experience. Maybe they'll be a qualified accountant, maybe they will have performed a relevant function within a business, but they must have that recent relevant financial experience. And you'll understand that when we start to look at the objectives of the Audit Committee and the help that the Audit Committee gives to both the internal audit function and to the executive directors within the business with the advice that they can provide. So those are the members within the Audit Committee, 3 non-executives in a large company, at least 2 in a small company, and one of them must have recent relevant financial experience. So what are the objectives of having an audit committee in the first place? Well, the first thing I want to mention is public confidence. The audit committee is there to oversee the business. They're there to make sure that internal controls are in place and that those internal controls are applied. How will they do that? Well, they'll oversee the work of the internal audit committee, and they'll also make sure that the internal audit function is correct in what it applies and what it does. So the internal audit function will perhaps go and look at a certain area of the business. They will come back with a report on the controls and compliance in that area. The audit committee will oversee that and make sure that any recommendations are acted upon. So if the public realises that the audit committee are there performing that role, well, that will give them more confidence in the information coming out of the business. So they'll have more confidence in the financial statements. They'll have more confidence that the business is being run in an effective way. So that's one of the main objectives of having an audit committee. It's good corporate governance and gives the public confidence in the information coming out of the business. Also in the audit committee, we will be able to help the directors. Remember that I've said that we will have non-executive directors on the audit committee and that those non-executive directors will have expertise. Because they have that expertise, they're able to help the directors. They're able to provide a function to the directors in having that recent relevant financial experience. They can tell when things are run correctly and when things are not. And they can therefore provide advice to the executive directors on how things should be changed. Also, one of the main things is that they provide an independent oversight committee. So what they can do is provide independence for the external auditor, for example. So the audit committee can advise the directors on who should be appointed as the external auditor. They can then provide a function whereby the external auditor can come to the audit committee if there are any problems, or in fact just to report their findings, and that can be better than going directly to the board of directors. Sometimes if the external auditor goes to the board of directors with problems, the directors see that as being a slight against them. So the audit committee can act as a go-between and therefore provide better communication between the directors and the external auditor. Also, we have the independence provided by having that audit committee overseeing the internal audit function and having a look at the financial statements and procedures within the organisation. So the audit committee is there to provide that independence because it's made up entirely of those non-executive directors. So some of the functions that the audit committee will carry out: they will monitor the financial statements, particularly the controls that are in place for production of those financial statements. Remember, they'll have that recent relevant financial experience, so therefore should have some expertise in that area. They'll also review the internal controls, so they'll do that by looking at the work of internal audit. So they review the internal controls by reviewing internal audit. Internal audit will report to the audit committee. So internal audit will go and look at various areas of the business and see if internal controls are compliant, see if they're used, see if they're up to scratch, and then will report to the audit committee on that. The audit committee will then make sure that any recommendations that internal audit make are carried out by management. So that's one of the main functions of the audit committee, to review the work of internal audit, to see that their recommendations are carried out, and to make sure therefore that internal controls within the organisation are sufficient. So therefore they're going to reduce the chances of fraud and error within the business. When it comes to the external auditor, the audit committee can recommend the external auditor to be appointed by the shareholders. They can also monitor the progress of the external audit. Again, they should have that expertise to know what should be happening with the external auditor and to deal with any problems should they arise. Another key function of the audit committee is to provide a whistleblowing function. Remember, a whistleblowing function is where if employees come across any problems, for example fraud or error, they can go to the audit committee in confidence, in a confidential way, and make sure that those concerns are dealt with. So the audit committee can provide that whistleblowing function to enable employees to come to them without fear of retribution. So those are some of the key functions of the audit committee, and there are some pros and cons to having an audit committee. Most of them will be pros. So some of the pros that we have are that we get independent reporting for internal audit. Think about it like this: if we didn't have an audit committee, internal audit would have to report direct to management. If management were the ones that were in charge of the controls, they may well not act upon the reports that internal audit give them, or indeed if there was a fraud being undertaken, it may well be undertaken by management. So therefore, they may well not act upon the recommendations of internal audit, or indeed may not advise internal audit on where to look for potential problems. So by having an audit committee, we can ensure that internal audit have an independent reporting mechanism, that they can report to the audit committee and again not have a fear that those reports will not be acted upon. The audit committee then can also check that management implement the recommendations of internal audit. Remember, internal audit won't want to actually implement the recommendations themselves because they would then be auditing them at a later date. So let's say, for example, internal audit thought that a new system should go in for payroll. Well, if they actually put that system in place, at a later date, they will be reviewing that system. That's an example of self-review that we'll be talking about when we come to our ethical threats. So we don't want internal audit to fall foul of self-review. So it has to be management who implement the recommendations of internal audit. Well, the audit committee can check that they do that. So the audit committee will make sure that management implement the recommendations of internal audit. Also, we can make sure that the directors are helped by the audit committee. They will have that expertise, and they can provide that expertise to the directors, particularly when it comes to complex financial statement areas. Remember, we talked about that better communication. So we should get better communication between the executive directors and the non-executive directors, as well as better communication between the directors and the external auditor. So the audit committee provides a go-between, both between the non-executive directors and executive directors, and the external audit function and the directors. We also then get that public confidence because we have the audit committee. If there's an audit committee in place, the public and investors will see that as a good thing. They will think that there's someone there to oversee management, to see that things are done correctly and that internal controls are in place. Ultimately, that should lead to a stronger external audit function because, again, external audit can deal with the audit committee. The audit committee should also ensure that internal audit are doing their job well, and that may well reduce the amount of work that external audit have to do. So those are all some of the good things about having an audit committee. There are some downsides, mostly around the fact that the directors may distrust the non-executive directors on the audit committee. They may feel that the non-executive directors don't know what they're talking about. Now, that may not be the case, and it's down to the executive directors and the non-executive directors to come together to make sure that each understands the role of the other. But you may find that the executive directors don't like having the audit committee there. You may also find that the non-executive directors become overburdened with the amount of work required on the audit committee. There's going to be a lot of work to oversee the internal controls, to look at the reports from internal audit, and it may be that that's just too much for the non-executive directors on the audit committee. It can be seen also as having a two-tier board, with the audit committee overseeing the executive board, and that may cause problems in terms of communications between the two. Ultimately, it can be down to time and cost. It's going to take time to set up an audit committee, to get the people in place with that expertise required, and that's going to cost money. So that may be a problem when it comes to the audit committee. So what about this relationship that the audit committee has with internal audit? Well, one of the main things that the audit committee will do is provide internal audit with access to the board. Remember, internal audit will report to the audit committee. The audit committee can then take any concerns that they have directly to the board. So they can do that. They can provide that access to the board for internal audit. Remember, the audit committee will also review the work of internal audit. They will make sure that any recommendations that internal audit make in their report are acted upon. So any results that come out of that should be implemented by management. Also, do note that the audit committee should meet with the head of internal audit at least once per year with no executive management present. So that's so that any concerns that internal audit have can be expressed in private to the audit committee. Ultimately, you can look at the audit committee as monitoring the effectiveness of the internal audit function within the organisation. So that's the audit committee and the relationship that they have with internal audit. But what is internal audit? Well, what internal audit actually do is still provide assurance. Just like external audit provide assurance to the shareholders that the accounts present a true and fair view, well, internal audit will also provide assurance. They'll provide assurance that the systems within the business are operated effectively. So they'll make sure that all of the systems are working properly. They'll go and do tests on the systems to make sure they're working as intended. They will also test the internal controls. So internal audit are very concerned with internal controls. They'll want to make sure that they're in place. They'll want to make sure that they're effective. And if they're not, they will report on that to the audit committee. The audit committee will then make sure that that report is passed on to management and that the recommendations are acted upon. They also need to make sure that if there are internal control procedures, that those procedures are followed. So again, they will test that. Ultimately, all of this is to check that information is reliable. So they want to make sure that the information coming out of the system is reliable because the systems operate effectively, the internal controls are in place, and those internal control procedures are followed. They also will check that corporate governance rules are followed and indeed that all required regulations, particularly industry-specific regulations, are complied with. So they may well carry out compliance audits as well. We'll look in more detail at exactly what internal audit do in the next lecture, but what we know at this point is that they will carry out assignments, and we'll look in detail at those assignments in the next lecture, and then they'll produce reports. So these are the reports that the audit committee will make sure are acted upon by management. So they carry out assignments and produce reports. Let's think a little bit more about the actual function of internal audit and what will make it effective. So to have an effective internal audit function, it should be three things. Number one, and most importantly, it must be independent. Remember, this is a real issue for internal audit because internal audit are paid by the company. They are another department of the company. So it's difficult to keep them independent. It's not like external audit where you get an external audit firm to come and carry out the work. This is a division or a department of our own business. So to keep the independence of it, we'll have to do things like make sure that the head of internal audit has sufficient seniority. So they should be seen as having the same standing as, for example, the finance director in the firm. Also, the internal audit function within the business should have sufficient standing. They should be seen in the light of what they are, i.e. an oversight function. So that means if employees are getting a little visit from internal audit, they should be concerned about it. They should want to impress internal audit. They should want to make sure that the work, procedures, controls are all in place so that internal audit can sign off on it. If they're not bothered, if the employees aren't bothered about what internal audit think, well then that would indicate that internal audit perhaps don't have sufficient standing in the company. Also, there should be that whistleblowing function for internal audit, that they can go to the audit committee and report to them without fear of retribution. The next thing that internal audit must be is well resourced. So they can't be under-resourced. There must be enough staff, there must be enough resources for internal audit to actually carry out the function that they're required to do within the business. And looking at the actual department, it must be well organised. That means they have to have competent staff. The staff should be qualified. They should be qualified accountants. They may well even have internal audit qualifications. They also need to have competent work practices within their own department. So there should be procedures, there should be review procedures, and there should be targeted testing to make sure that the work carried out by internal audit is of sufficient quality. So those things will need to be there for the internal audit function to be effective. They'll need to be independent, well-resourced and organised. But there are some limitations that we need to look out for, particularly look out for these in scenarios. When it comes to reporting, who should an internal audit report to? Well, of course, we know that it should be the audit committee. So if you see in a scenario that the internal audit function reports to the finance director, well then you can suggest that that should be to the audit committee. So the internal audit function, to retain independence, needs to report to the audit committee, not to executive management. What about the scope of internal audit, i.e. what work they carry out? Well, that scope should not be set by management. Because again, if there is some sort of a fraud being carried out within the organisation, the odds are that that fraud would be carried out by management. So they shouldn't set the scope of work that internal audit carry out because they could keep internal audit away from that particular area. So the scope of work should be set by the audit committee. The head of internal audit, remember, they need to have sufficient standing, they need to have sufficient seniority, so they shouldn't be appointed by management. This should be done independently, either by the audit committee or perhaps by the nominations committee. We also need to be careful about this self-review that we already mentioned. So internal audit, remember, will be reviewing the work within the organisation. So they shouldn't be reviewing their own work. So that means that they shouldn't implement systems that they'll be reviewing at a later date. It also means that the same staff shouldn't be reviewing the same area year on year. So if one member of staff audited purchases last year, well then they should be auditing a different area of the business this year. So they should be rotating staff. That's a big issue for internal audit because they'll have a limited amount of staff, they'll have limited resources, so they need to make best use of those resources to avoid self-review and rotate their staff accordingly. Okay, so let's look at an illustration to see how this could come up in the exam. So read through the scenario to make sure you understand it. Then maybe have a go at the question before working through the answer to learn from it with me. In illustration 1, our requirement is to criticise the internal control and internal audit arrangements at Gluck and Goodman as described in the case scenario. So we're going to criticise what they have available here. So the audit committee here we can see is chaired by an executive director. One of the most important roles of an audit committee is to review and monitor internal controls. So that's the link between the audit committee and internal controls that we're looking at in this lecture. An executive director is not an independent person, and so having Mr. Chester as the chairman undermines the purpose of the committee as far as its role in governance is concerned. So the audit committee that will be there to oversee our internal controls should have a non-executive as its chairman. In fact, it should be all non-executive members on the audit committee. So Mr. Chester, the audit committee chairman, also considers only financial controls to be important and undermines the purpose of the committee as far as its role in governance. So as we're talking about internal controls here, do be aware that we're not just thinking about financial controls. Although it's accountancy that we're looking at, the rest of the controls throughout the business are just as important, not just the financial controls. Also, Mr. Hardinger's performance was trusted, so they didn't get any supporting evidence because of his reputation as a good manager. An audit committee must be blind to reputation and treat all parts of the business equally. So they just looked at how good his reputation was. They didn't actually look at the work that he was doing, and that's a big problem. Also, we can see that the audit committee doesn't enjoy the full support of the non-executive chairman. On the contrary, he's sceptical about its value, and that will be a problem because in most situations the audit committee reports to the chairman. So it's important that the chairman protects the audit committee from criticism from executive colleagues. So the chairman must be there to actually stop that criticism happening from executive colleagues, and that's unlikely in this situation where he's really sceptical about the value of the audit committee. There's also no internal auditor to report to the audit committee and therefore to make control decisions based on that information. They are the operational arms of the audit committee, so we'll be looking at that relationship in more detail, how internal audit performs checks on controls that we've been looking at in this lecture, and then the audit committee will oversee that function. So without that data, then the audit committee really can't monitor the systems in place. Also, the ineffectiveness of the internal audit function could increase the cost of external audit. So the external auditors may view internal controls as weak and therefore need to do more work upon them, and that would increase the cost to the business. So actually it can have a direct impact on cost. That then was our lecture on the audit committee and internal audit. We're going to go on in the next lecture to look in detail at the actual assignments that internal audit carry out.